tough fundraising now. And many GPs don't like to say it, or they don't want to accept it because they see like it's their problem. But we're all facing that problem, and something that we have to understand. And the new project that we're doing focuses on that. It's tough fundraising in Mexico and in the US. But I'm going to tell you the main difference.
Hi, everyone, and welcome to La Frontera, a podcast dedicated to exploring the dynamic startup and venture capital ecosystem in Latin America and the innovators behind it all. We're your hosts, Cyrus and Tom. If you enjoy this conversation, we invite you to subscribe to our newsletter where we announce new episodes and share additional insights and resources for founders and investors alike. We'd also like to invite you to share this podcast with your friends and to leave a review on Spotify, Apple, or YouTube to help more people discover the show. We love hearing from our audience. You can connect with us on LinkedIn and Twitter by searching for La Frontera Podcast. In this episode, we sit down with Susy from DUX Capital to explore the hustle, focus, and luck needed to break into venture capital, the critical role of female investors in the startup ecosystem, and why fundraising in Latin America is facing extreme headwinds. Susy shares actionable tips for founders preparing for early-stage fundraising, from building strong data rooms to managing investor relationships, and reflects on the rapid rise of Mexico City as one of the most exciting and vibrant startup hubs in the world.
Hey folks, welcome to another episode of La Frontera. We're here with Susy from DUX Capital. Susy, thank you for being with us. So one thing that we want to learn before we get started is, can you tell us a little bit about your journey? We know that you were the co-founder of Mujeres Invirtiendo, which focused on empowering female investors in the PE industry. You got your MBA from IE in Madrid, worked at Hill Ventures, and you're now at DUX. But could you tell us a little more about like your background and then your journey into venture capital?
Yeah, definitely. First of all, thanks for inviting me to La Frontera. Amazing thing how like you can meet someone from LinkedIn and now you're here and maybe even more. So happy for that. So I have started in venture capital without even having a really know-how of what venture capital was, to be honest. Everything started at university. I was doing my undergrad in business here in Mexico at LatAm, where now I teach to the same students entrepreneurship and new business models. Happy whenever you guys are in Mexico that you can come to my class. And we created the TEDx Talks, which are these chapters of TED Talks within universities. And I invited Adolfo Babatz from PayClip into speaking to that event. And I started to see all the success stories of founders coming out of my university. And I never understood why all my friends wanted to work like at Goldman Sachs, JP Morgan, Evercore, like the top investment banking. We studied business and finance, and I was like, I don't want to do that. My dad was an investment banker. So I understood that part of working from 7 a.m. to 2 a.m. and was part of not what I wanted to do of myself in the future. And I saw like maybe entrepreneurship, something with investments and entrepreneurship makes sense, but I had no idea what was really a venture capital. Adolfo mentioned he had investors and things like that, but I thought investors were like more private or banks or like the typical like asset managers. And that's when then the next semester, so that was like the first thing that took me like, okay, founders and money and like investment makes sense. Then next semester, I took classes with the ex-partners of LVP. And now that you know me, guys, I'm that proactive one that participates in everything, tries to do everything. And I was really offended because I was not offered a non-paid internship after taking the class. They're like, how did I not receive an internship if I was your best student? I had these co-working space ideas like before we entered Mexico. So I had like good business ideas in class, or I feel at that moment I thought I had the best ideas in class, and I was not offered to work with them. So I was like, okay, this cannot happen. I am going to work in a venture capital firm. So then I emailed Hernan from Angel Ventures, a literally cold email. I did CC one of his LPs because he was a really good mentor of mine. So that I thought maybe he'll answer me faster. So I'll never know he really answered me because he was in the email, or it was just because I emailed him. He's like, hey, I really want to understand more about venture capital. I'm just finishing my undergrad. I'm on my last semester in college, and I would love to work with you and do a 9-paid internship during the summer. And that was like in May, and he answered me like Monday that week. I said, perfect. Do you have a laptop? Come join my office. So literally offering my work for free, which I knew was a gate opener because there was no, and there's still no formal processes for hiring and recruiting in venture. You guys know that perfectly. And I started working with them. So I remember my first week, I did a bit of everything, reading their annual report, helping them print documents, organize their annual anniversary because I just joined when they were going to have their annual anniversary, which is like a really large party. And slowly trying to show the partner that I had much more potential and that I really wanted to work on that. And I worked all my professional career prior to the MBA with them. I never even looked for another option. I got a couple of interviews from other larger funds, and I was like nervous of just going because I really liked it. And I think and my friends were like, "Why are you nervous of going to another interview? Everybody goes and looks for more interviews and tries to negotiate salaries, carry everything." I just loved it and I was part of it. And there was a moment when I realized I need to do something else and I want to become one of them, Hernan and Camilo. And I was like, I cannot become them if I am not either probably 40 years older or 20 years older, have an MBA from the top business schools, or I'm a man. At that moment, and that's when we started Mujeres Invirtiendo, there were no female partners of venture capital nor private equity in Mexico. So I was like, I can only do one of those, that's having an MBA from the top business schools in the world. The other are not viable options at all. And that's why we started Mujeres Invirtiendo a couple of years before I went for my MBA.
Yeah.
Basically realizing that need. Studies from HBS and Stanford were giving all the data that diversity boosted returns and that while funds were more diverse, they had better financial returns. And a couple of women from the industry invited me to first a couple of dinners, just like to mingle, meet each other, and help things in the industry. And we were all saying to ourselves, like, why if data show that this has better returns and we're all working for a better alpha or a better return, we're not doing that? Like, why? So we started first, our job was networking with all the men GPs at the funds to show them that they needed diversity. And what did they need diversity? We started seeing that the next partner that they hired, they were going to be women, which at the end was going to take us to an industry where even we have more females working at an inter-analyst position, which are then going to be promoting more investments in female founders. So there's a domino effect of having all of that part. And our main job was having more women at an investment decision level. I can tell you now, most of the GPs say there's no female founders. There's female founders look for GPs that have a female within the GP team. So at DUX, we do nothing that, if you see our webpage, there's nothing that says we invest in female founders. That's not our investment thesis. We just invest in the best founders. But around 36% of our pipeline are female founders because I'm on the team. And that's like something that just naturally happened for that. So long story short, that's how I ended in venture capital, being proactive and offering my job after not being offered an internship, and stayed for there almost 6 years prior to doing my MBA.
Yeah. Actually, we were just talking the other day about some statistics about investments into essentially like female founders or female founded businesses within LatAm, but how that's such a small percentage essentially overall of the amount of.
The interesting thing, and I'm interested to hear your kind of reaction to these stats, which are from ChatGPT, so 100% correct.
Of course,
but essentially,
that's source of truth.
What I've been finding in research is essentially there's actually more female founders, or at least who are at least like part of a founding team of a tech-enabled startup in Latin America. Like the percentage is higher than it's higher in Latin America than it is in the US. However, and let's call it like 30 to 35% have a female founder on the team in Latin America, but only 15%, call it, of VC funding actually goes to those companies that have a female founder on the team. I was like wondering what's your reactions to that, and what's the gap there, and why are these like female run companies not getting funded as much?
So many women are gonna kill me for what I say, but I always try to not be sugar coated. There's a risk tolerance that women have versus men, and there are great businesses, family-owned businesses, side businesses, many we call them lifestyle businesses, run and managed by women, because they are great making a restaurant chain, department stores, hair salon, beauty, I don't know, and a service that for being a wedding planner. Those are businesses that sometimes give better returns than venture capital. We have to be realistic, but they're not fully risk adverse projects. Their risk tolerance is lower, and they launch much more stable businesses. So you see in a percentage, they launch more businesses. So there's more entrepreneurship or more founders managed by women. But men are the ones that are trying to go crazy and try to innovate and say, I'm going to change the world because I am Superman and I'm going to find the new payment platform. I'm going to find the new way of getting into Mars. And many women don't have that same ambition. And that's something it's called imposter syndrome. They don't think they can do it. And they launch so many companies like that. So that's when you see it at the end. Yes, there are a lot of companies launched by women, but they're not VC backable. But they're still great businesses. And they move the economies of underdeveloped economies like Mexico, Chile, Argentina, Peru. I mean, mostly all LatAm. But they just don't fit that like venture backable exponential growth idea that's fully renovating an industry.
That's actually a great point because I saw like another metric where it was saying that in Latin America, like informal businesses are at like, I think it was saying that 40%, I forgot, I got to find the statistic. I don't want to say wrong statistics, but it was saying something around there were a higher percentage of women that were entrepreneurs, but a lot of them were like informal businesses. So whether that could be like food carts, things like that, whatever that might be, but also like other businesses as well. But that's a great point though, that essentially some of these might be actual businesses, but they might not be venture backable. And venture backable businesses are a small portion, I feel like, of all the small businesses that are out there. Because I think small businesses in the United States make up like a majority of all essentially like the revenue produced in the United States. Because I think SMBs are the largest portion of the percentage of business.
In Mexico, it is. The economy is moved by SMBs, but they're not all venture backable. Like I was speaking on Sunday with two women that make junk bars for weddings.
Yeah.
Their average ticket per wedding is $1,000. No, it's $20,000 per wedding.
Oh, wow.
And they just sell candy that they buy at Costco. They put it nice. They add like chili powder, things like that. And they can have 2 to 3 weddings per weekend.
How about those margins?
Yeah.
There's no investment there. Like, and that's an SME that they have 20 women working with them. They create nice names, and they're super profitable. No risk, no capex, no nothing for that. Huge margins, as Thomas said, every single event. But how would a venture capital come in those businesses? Makes no sense. And that's just one example. And you don't even think it. You go to a wedding and you say, oh, there's chips and candy. So that's a huge business.
Incredible.
And there's some that they were telling me, like weddings, like large weddings in Monterrey and Guatemala, they can charge even $1 million for a junk bar.
After reviewing the business financials for a lot of SMBs, Tom knows this, but I kept going back and forth with myself. I was like, why am I in the venture / like startup world? There's so many SMBs out there with incredible margins and are cash flowing within like the first or second year. So what are we doing?
But we like it.
I think it's the potential to cause like real change, like especially within a region in LatAm, like the tech-enabled startups that are like really creating a solution, right? That is actually like changing lives, especially I think some of the ones that we're working at this summer, like fintechs that are like changing the way that people are like paying essentially across the entire region.
But so you mentioned that you were talking about how you went to do your MBA overseas and then worked at Credit Suisse for a little bit in Switzerland. So something that we want to know is what brought you back? If you went to do your MBA overseas in Spain, you could potentially get jobs in Europe. What brought you back to Mexico aside from being from Mexico? What attracted you back to the Latin American market to invest in startups here?
Since I went to my MBA, I thought I was coming back to Mexico. I love Madrid, but I'm not sure I live in Madrid forever. And then I joined Credit Suisse, something completely not planned for me. They bought me, as they would say. They pay you to work for them. Completely outside the market, salaries, everything. And I was like, I'm an MBA student. I need money. I'm in debt. So I'm going to work with them. So I took the internship program, and I fastly realized that I didn't like working at a bank. Something that I knew beforehand. They invited me to join private banking for ultra high net worth individuals. individuals for Mexico in Switzerland. And a very interesting job. A job that I didn't really understand at the beginning how the relationship works between client and banker. It's completely different how it works between LP and a manager. Even if in both sides you're managing their money, it's completely different. And I would say being in Switzerland, I was not sure if I would stay there, come back. I'm the only one that didn't accept the offer to stay. I'm happy to say, oh, the bank doesn't even exist. So at that
Yeah.
moment,
The call. Yeah.
and I have amazing friends from there. But the best feedback that they gave me that I'm the worst employee. I'm not an employee style. I never understood I had to arrive to the office before my boss and leave after my boss. Nobody told me I did my job. Why should I do that? So I arrived late, did more days of home office than I should. If I finished, I left early. So for me, it was a really good panorama for actually proving to myself that I didn't like a corporate job. But now I can say, like, I tried being a banker in Switzerland. I didn't like it. Before I said it, like, I would never do that, but I didn't know what it was.
Yeah.
But now I can say that. And what brought me to Mexico was very easy. I was still in Switzerland, and Jose Luis and Daniel called me one day. I'm sure they were not conscious of the timing or remember that I was living in Europe. And I was like, why is Jose Luis calling me at 1 a.m.? But I was awake, and I answered him. And he joined me. He asked me to join as their third partner for DUX Capital. If you read my MBA essays, that's what I wanted to do. Be one of the first, I think I said first 5 female GPs in Mexico. I think I'm one of the first 10, but who cares? It was just being one partner in Mexico. We still need more. Like, I'm not proud to say one of the first 10. I would love to say I'm number 1,000 or 100 and something, not number 6, 7, or 8. And there was a non-written clause that we all had in venture capital prior the large Asians and Middle Eastern funds arrived to Mexico, where we could not steal talent from one fund to another. Now nobody cares about that. DUX has been like that place where everybody steals talent, and now they're working everywhere, and they love us for doing that. Now I'm telling them with our new project, you guys are not stealing anybody of my team. But before they had the capability of doing that. So I had worked a lot with Daniel and Jose Luis. We were really good friends. I had traveled with them for business, but they had never invited me to join DUX because that was like something that you couldn't do because I worked at Angel Ventures. So they were like, now we can do it. We're not stealing you from one fund. You're at your MBA. We want you to join our new fund. And they gave me a really good investment thesis. That's what made me not even look for other options when they asked me to join. About this cross-border thesis between Mexico and the U.S. So as you guys are coming to Mexico and now you're liking what's happening in our country, I grew up having most of my family in the U.S. My grandparents are immigrants. My mom's side are immigrants from Armenia. I'm first generation in Mexico. Half of her family arrived to the U.S., half of her family arrived to Mexico. So every year I spend Thanksgiving at one of my aunt's uncle's house in the U.S. Then they spend Christmas here. Every summer I was either in Armenian camp in LA or a tennis camp in Boca Raton with my other family. Anywhere that I was going, we had this like cross-cultural background. And for my dad's side, I grew up with that. My grandparents were ambassadors of Mexico in the U.S. My dad's brothers stayed in the U.S. since they went with my grandparents. And it really made sense for me at a business side, at a perspective side, at a social side, to do things with the U.S. Half of my life was there. And I never understood being at Angel Ventures, and that's the thesis for many funds. And I completely respect it. It was, why are we investing in Argentina, Uruguay, and Peru, and we're just adding extra layers of risk into what we're already doing? That's completely the most risky asset class. Why don't we reduce a bit of that risk and do it with the U.S. market? So I love that part. I knew I would be open to work with them. And that maybe if I come to Mexico, where DUX Capital was based originally, now we're based between Austin and Mexico City. I'm here and I'm still planning to be in Mexico, but we're based between Austin and Mexico. open to travel every couple of weeks to the US, but still living here. That's the good part of having a hybrid and remote work style.
Yeah, it's the ideal situation, living the dream, really. And then talking a little bit more about that, kind of like the difference between investing in the startups in Latin America versus the US and diversifying that risk. Like, what are like the differences in risk? How do you like layer that in when you're like evaluating a company, depending on like where they're based? Obviously, like the market that they're operating in is going to be greater if it's operating in the US than it is in Mexico, or even smaller in Peru or something. But would love to hear, since you have experience investing in the US and both in LatAm, what you view as the differences in risk.
So the main risk and what we see is that we only invest in Latinos in the US, just to clarify that part. And most of them have bootstrapped companies. So many of those Latinos don't have a background of having a huge network of financial individuals or potential angel investors. And they had one time to prove that they were doing right the entrepreneurship or the new venture. So many of the companies that we're seeing have been bootstrapped for the first, second year. They're like minimum revenues of $1 million, $2 million in American revenues, things like that, on a completely different path than the ones in LatAm. So, of course, that makes us mitigate the risk a lot because they're proven businesses. They're not basic ideas. No, they're not one PowerPoint slide ideas of what's going to happen in the market because of the background of the Latino founders within the US market. Versus the background of probably the Latino founders in LatAm, that's still the one that has the possibility to launch a startup, have a good network of angel investors, or many of them, or come from the top MBA schools in the US and have graduated from like the nice entrepreneurship programs, and they can fundraise large rounds with a couple of 1 or 2 slide pre-revenue, pre-MVP. And mostly that happened when I was leading Angel Ventures, when I went for my MBA, and when I came back, having a lot of dry powder from international funds investing in LatAm. Now I think it's more complicated for LatAm founders, and they will start to have something more similar to what's happening with the Latinos in the US. But my main point was that here they were more willing to take the risk, and it's like part of being a founder. And if I fail for the first time, I can do it again. For many in the US, we have an amazing story from innovator to Mexican and American founder based out of Chicago and El Paso. Now they're living the Mexican dream and moved to Guadalajara and Mexico City. But when we invested, they were based in Chicago. And they literally explain you how their family migrated to the US, how they realized that education was the best way to break the poverty cycle and the criminal cycle, and like the lifestyle they saw near them living at El Paso. And they focus on education. One of them worked at Google, the tech side. The other worked for Chicago Public Schools and the Bill and Melinda Gates Foundation in their education program. And now they have an amazing platform for the education system in public and charter program schools in the US. But as I said, like, if we left our jobs, we have to do this because we have not the option of, I can just work for free 2 years and then go back into the market. And that changes a lot. Here, they can take those risks, and angel rounds or friends and family rounds let many of those founders happen. And that tells you why there's much more write-off here than what we're seeing in the US. Of course, there's write-off everywhere. That's part of the venture capital thesis and business model. But I think those are the main differences. And of course, all the support that comes from the stable economy, the government, the grants, the everything in the US does not exist in LatAm, except in Chile a bit, but not in Mexico at least.
Yeah, and you touched on like complications for startups in Latin America. How about on the investing side, VCs? What's your kind of pulse on the environment in Latin America right now? We heard your opinions a couple months ago speaking at an event. I like hearing your perspective. It's very realistic.
So it's tragic. I had coffee with one of my mentors, the first person that I mentioned, that I copied him in the email that I sent Hernan. And we were talking about the industry, and he was like, Susy, nadie me había dicho que estaba tan mal la industria de levantar capital. Like, oh, yes, it is. Like, it's tough fundraising now. And many GPs don't like to say it, or they don't want to accept it because they see like it's their problem. But we're all facing that problem, and something that we have to understand. And the new project that we're doing focuses on that. It's tough fundraising in Mexico and in the US. But I'm going to tell you the main differences. In Mexico, the main problem is that there has not been many exits. So for the first high net worth individuals, corporates, and family offices that came into funds with vintages of 2012, 2013, 2011, 2015, they want their money back, and they have not all received their money back. The funds are still invested in companies. They have not lost the money. They still have a good NYC, but they don't have a DPI. So me as a new or emerging fund manager, I go to look for these family offices that we have to be conscious that there's a very limited amount of family offices in Mexico or high net worth individuals willing to invest and take the risk on their money in venture. And they all tell me, Susy, I love it. I love your like your new initiatives and you guys are trying to do, but I'm waiting for X, Y, or Z fund that I'm already committed 8, 6, 10 years ago to give me all my money and my returns back, to then realize if I'm going to invest again in their next vintage or if I'm going to be open for new managers. And there's nothing to answer to that because it makes sense. If I would have been one of those LPs, I first have to prove that the asset class is going to give me the expected returns before committing more. Mostly also, I know I was speaking with this, we're going to be speaking in another panel about this. I think now it's the famous topic that they invite me to speak about at events. But mostly part of some of them not being used to very long-term investments. Real estate has been a cash king in Mexico. I always say those were the investments my grandmother did and they work and they still want to do them. So for many LPs, investing in a fund and then investing again 4 to 5 years after and being open to wait 10, 12, 14 years, if you go adding up every vintage to have their money back, it's something that they're not willing to do because they have other investment options. In Mexico, just start by saying Nubank gives 15% free risk interest rate. Venture capital with a 30% interest rate that attractive anymore. Of course, that's limited and that's not full free risk or whatever, but makes it being more complicated. And that's for me the main problem. There's a few exits. I'm happy to mention that I'm friends with a couple of them, but we need many more. I don't want to say I'm friends with 3 to 5 guys that have made exits, but I would love to not even know the new exit that there is because there's thousands of exits in Mexico. And that's a bit of what took us to focus investing in DUX in the US market. You guys know the liquidity that there's in the market. There's exits for tech companies, and I'm not saying that you only have Google, Amazon, or Apple as an exit. Many large tech companies buying companies at $150 million valuations. If we're coming in a pre-seed round of $4 to $6 million, exiting at a 60 to 200 valuation makes more sense than anything. And that market doesn't exist here. There's also not a private equity market here that really buys positions into funds. That there's a private equity market in the US. And lastly, there's no an IPO market in Mexico, which there's in the US. So all of that brings us to invest in the US. But that's where we realize this emerging manager paradox where there's so many programs that want to invest in managers. And our main problem, which sounds strange, is that we need very few money. So we're only fundraising $35 million for DUX. But if we were for raising $35 billion in Mexico. Because every time that we go to investors, they tell the same. We love what you guys are doing, but our minimum check is $100 million. And we can only own 10 to 15% of your fund. So if you do simple math, we should have been raising $1 billion funds. Something that wouldn't make sense for DUX. Raising $1 billion funds, we could not deploy it correctly. We will have very bad allocations. And at the end, we would be sacrificing our returns on our multiples just because of the assets that we have under management. So that makes the paradox and the chicken or the egg problem of being an emerging manager. It's like everybody wants to invest in emerging managers. Emerging managers give better returns. But how the hell can we fundraise from those? So that gives a very negative perspective for fundraising. I'm happy to say that we did secure our first closing with Bank of America. We are currently investing. We made 2 investments out of this new fund, but I'm going to be accepting that it's tough fundraising. And well, I hope this gets solved pretty fast. I
Yeah.
think there's mechanisms to help it, but it's tough.
So actually, want to touch on, you were talking about essentially like the secondary market in Mexico is not as active as the United States. What does the secondary market look like in Mexico or in Latin America in general? And are there
So
like any
now
funds in it?
yeah, now there are a couple of funds. There were not funds before, but now there are a couple of funds. So that's great because at the end, you have that other option that's not only selling to another startup or another corporate, but the secondary exit market. I haven't done a secondary deal with a fund, let's say, so I'm not sure how it really looks in terms of multiples advantages. It's always better than having a write-off. So whatever you can get back from a company is always going to be better. But I'm still not that familiar on how it's working it. But I'm happy to see that now there's funds approaching us and, hey, we have these secondary market options. What's that? How's your portfolio? What are you guys selling? What can I buy? So it's good that now we now have that option. We didn't have that option a couple of years ago.
Yeah. Nice. No, that's incredibly helpful. I think that's one thing that's always great and fosters innovation is going to be like liquidity and just access to capital as well, just in general. So access to capital, early stage startups, and then liquidity later on. So great to see that the secondary market's coming is a little bit more active within the LatAm ecosystem. And on that note, so wanted to learn a little bit more about what attracted you to early stage startups. We know that at Actionable Ventures, you worked as a portfolio manager, worked on like the day to day with all the different startups. And now at Dukes, you're investing in these startups. But what brought you to invest in early stage startups versus later stage growth stage startups?
So one is my expertise. I've always done that. So at Interventure, we never did growth companies. So I don't have that expertise of analyzing growth companies. I have more the expertise of analyzing the potential and what a company is going to do more than their historic financial statements for the past 20 years. Of course, I understand them and that's part of my job, but I'm more on that part of how or what potential we see on the midterm and long term. And then the other one, I think, if you know me, I'm very proactive. I try to see how can I help. As large as the companies are, they just need more money. They don't need that much of your help, your mentorship, or your guidance. And I think that at an early stage, that's what we can do the most. We always try to say in Duke that we're a passive investor, but an active investor at the same time. We're an active investor, but never an invasive investor. So we really look to have a passive role, but be as active as the founders need us. In other ways, we always like to be like the co-pilot for that startup, but we don't like to be the passenger of the company, and we will never be the pilot. But we do help in however things are going. And there's also timing. There's timing that founders text you every single day and they need a new check, psychology support, a friend, someone to speak with ideas, brainstorming. And there's months that founders don't need you. And it's also part of our job to know when they need it and when we should step back.
Yeah. I guess, how do you know like how often do you spend a lot of time reaching out to founders and asking them what they need, or is it more of waiting for founders to come and reach out to you guys? What kind of support do you guys provide for founders after investment? What does that look like?
So we do try to schedule monthly calls or quarterly calls depending on the stage of the company and also how involved we are. There's companies where we were the lead rounds, that we had a higher check. There's company where we were more of a follower. On that calls, try to understand what we need. But sometimes it's more that we always tell them that we're open. Just text us whatever you need and we're going to help you. So many of what the founders actually need, it's more coming from their side than us asking them every day, like, hey, Cyrus, are you okay? Hey, Tomas, do you need something? And sometimes we do receive some offers, projects, programs, sponsorship, grant that we send them like, hey, I think this makes sense for your company. But those like fast touch points, like 15-minute calls with the founders, let us know how they are and how we can help them. And what we do mostly as support, I would say, opening our B2B network. So we do prefer to invest in B2B solutions. We do have a really good LP network on just background network, having Jose Luis as the banker and the Niafa founder for companies doing commercial relationships. So helping them in our commercial side has been something that we really help and try to support them.
Very nice. So one thing that you might have good insight into is what are most of these founders coming to you and asking for help with? What are some of the most common items that founders need help with that they come to you guys for?
Talent, it's always one.
Okay.
Hey, do you know something on those days? Hey, do you know a good CFO? Hey, do you need a good accounting firm? That's always one. Of course, the other is investor whenever they're raising a new round. That's not always, but every time that there's a new round, we do try to make good intros. I always tell other founders, hey, making intros is tough for us because our priority it will always be our portfolio companies. So why would I send you guys that are a new fund, company that I just met through my CRM, which may do sense for you guys if I can sell you one of my 18 investments that need a follow-on round and I cannot invest in them. So intros to investors are the other. And lastly, sometimes a lot of guidance on like the business model. So for example, during COVID, we helped one of the companies pivot 180 degrees. They needed that, and the founder was very receptive for the feedback of the board. There's others that are trying to understand if they should do an influencer marketing strategy or a Google SEO strategy or how they can prove it, and help them a lot with that strategic side. But these are around half what we offer them and half what they ask us to do for help.
Yeah. And when you guys are investing in these founders, do you like in terms of like silos or terms or things like that, do you guys ever typically like what's typical? Like things like data rights, pro rata, sort of liquidation preferences, et cetera.
I would say the basic 101 safe done by Y Combinator, it's okay.
Yeah.
There we always would ask if they didn't add them, it's pro rata right, information right. Board seat if we can, at least as an observer or a decision maker. Whenever there's a board, we don't have to have a board at that moment, but whenever a board is created,
Yeah.
being part of their board, the basic anti-dilution dragging and tagging clauses, everything that we learned in the venture deal book, I would say it's important. But we also modify each term sheet depending on the company and the stage. We'll also be realistic that you cannot ask the same to every company because the situation in which they are changes a lot how you can negotiate, and you should negotiate that.
And sorry, going back to the data room, because that's something that I've spoken to a lot of founders in LatAm about, because a lot of them, especially like early stage, when they're looking to get pre-seed funding, for example, they were wondering like what they should include in the data room and how much money or how much information to include. And it seemed like a lot of folks didn't put a lot of detailed information in the data room because I've taken a look at some of them. At the pre-seed or seed level, at the early stage level, what typically do VCs in Mexico or throughout Latin America look for in the data room? Is that any different from what would be expected from startups in the United States? So, for example, like financial models to make sure they understand the inputs and the potential for their startup, the legal documents, obviously, pitch decks, demos, things like that. That's all pretty standard.
The standard words everybody can ask them at any stage that you are.
Yeah.
I'll say on the other, we would like to be more explicit on understanding the market and their market opportunity. When we invest, we always try to understand if this is a nice to have project or a must have project. So how are we going to find that on the data? Because every founder tells you that we all must have something, but do we really need to have a different type of airports or the one we have whatever? I don't know. Something like that. And for us, it's understanding the business model and more than the numbers in the financial model, because you just change one assumption and everything changes. For us, it's really getting in depth on what are those assumptions that the founders have. What key assumptions can change and changes all the business model and all the predictions and the performance and everything, and what other assumptions are not that important. I would say for us, that's the most important part of understanding both the business model and the financial model. And if we don't do this, as we had in our call in the morning, like if we don't sign that commitment, what does that mean? So what's one thing that can change every single thing in this model? Because sometimes not even founders know it, or they don't want to explain you that to understand if that's a high risk or a red flag, or there's something that we can mitigate to solve that main assumption that changes everything.
Exactly. It's what's the one thing that could just completely tear apart your business? And
Exactly.
what's the chance of
And
that?
what's the chance of that? And can you mitigate that risk, or is that, I mean, like we were
Yeah.
seeing one company and potential investor was asking us like, but Will, what if social media stops working? And I was like, dude, social media, that's not the one thing that's gonna change the business model.
Yeah.
Probably social media is gonna change and we pass from Facebook to TikTok, but at the end it's still social media and it's showing everything and liking it and sharing and commenting just at a different rate. So if that's your main red flag, don't be worried. Like social media is still gonna be a thing for the next 100 years, and you're gonna have exited in the next 100 years.
Yeah. Hopefully.
It's not that fun how died.
Yeah. I know we only have a few more minutes, and I do want to make sure we cover Mujeres Invirtiendo, because I do think that's something very special, because it does seem like you built a great community and it's flourishing into something wonderful right now. And then for Mujeres Invirtiendo, something that was also kind of like top of mind, because something that we obviously with the podcast have been trying to do is how do we get more people into like angel investing, for example, or just how do we get more capital into Latin America, but also like just Latin founders as well, Latinx founders. So something that would love to get your take on is how do we get more women to angel invest as well? Because it seems like angel investing, or at least obviously going to those roles, those professional roles was one way, but angel investing is something that there's a broader population that could probably help out and get involved in that. How do we help folks get more involved in angel investing? What kind of resources do you think are going to be helpful for folks, and especially the women?
So we do have that as a special project. So last year we did a program with Shani Ventures. Chandel, which is a YC founder, is now working on helping female founders be investors, LPs, advisors, everything. And we did our first MVP program of an Angel Investor Academy. We did that with many years of going into different places in Colombia and Peru and educate, or he calls evangelizar new investors. I think there's still a lot of things to do there. Also, if you have ideas, we're open to do that. I've spoken with Angel Hub and Angeles investors to work something with them and see how we can get our women. And the other is also trying to have more data. Nobody shares their personal investments as an angel investor. So we don't really know how many of them are or are not, or have tried to be and haven't found a company. Like very private data that angel investors have mostly everywhere. So probably our best option is going to be working with some of these like angel investor hubs to centralize all of through them, and for us to be sure that we are promoting more female angel investors.
Yeah.
And then I have a question for you, I guess, like last question. Being in Mexico City right now and having been there for a good amount of time. So we were there this summer, saw a lot of really cool events happening, a smaller community of people in the startup and venture ecosystem, but definitely people who are energetic, and it's fun seeing like kind of similar people at all the events, and it grows year after year. What's your kind of finger on the pulse of the community down there?
Nothing compared to how it was 6 years ago. The industry now is huge. Many things. Probably this week I'm overwhelmed because we're having Tech Week next week. But the industry has changed a lot. It's much more professional. There's much more options. Sometimes I think there's too many events, but we're Mexicans and we like to party. So it's like every excuse for anybody to host an event. That's something that's basic as standard, going to a club or founders inviting someone to their houses or drinks at someone's office or anything. I think that changes just culturally with the US. But maybe I'm happy to see how that community started. I'm going to give you an example. There's a WhatsApp group. I don't know if you guys are there, but we created it with the first 10 analysts that we joined in 2016 in venture capital. It was called LatAm Venture Analyst and Associate. Now there's everything in that WhatsApp group. Now there's like 600 people there, and they plan events and Chilango Fridays and things like that. And I love how the industry has grown and how there's much more people. There's more female interns, analysts that are going to eventually grow in the industry. Same with more men, more diverse teams, much more foreigners. At the beginning, we only have French people working with us. Now we have people from everywhere. So it's amazing how it's been growing and getting more professional. Of course, it's not San Francisco, but we don't have to be San Francisco. We have to be our own best version of what's happening in entrepreneurship here. And it's amazing how it has grown. I was seeing the data. Tech Week last year had only 60 events. I don't know how many events there this year, but like 200 events. Last year, we were worried of having one paddle tournament. I think now there are like 8 paddle tournaments. There's people running half a marathon in the morning,
Yeah,
taking
so there's
spinning classes, taking yoga classes, taking hikes on Saturday, but also partying every single day at afternoon and during the day going to conferences and AI talks and fintech talks and art talks and everything. So I'm happy to see how everything is much more larger and professional.
Yeah.
Yeah, it's awesome. Excited for it.
So two
Yeah.
things really. I think I prefer the Mexico startup ecosystem to San Francisco. It definitely seems a little bit more lively. And then number 2, I can't believe you haven't invited us to that group chat yet.
All right, I don't do anything more in the group chat, but I'll add you now. I don't have Tomas WhatsApp, but I have your WhatsApp, and you will invite Tomas.
I'll send it over. I'll make sure.
Perfect.
Shop for Friday sounds incredible.
You
Love it.
have to move to Mexico, guys.
Oh yeah. I
Full
mean,
time.
Believe me, it's in the works. Yeah, the vibes are definitely much better down there.
Susy, thank you so much. I think we're right about time. Yeah, this has been an incredible conversation. I think I can speak for the both of us. Like we've learned so much. I mean, I think our listeners are going to also really appreciate listening to this. There's a lot here. I'm back.
Thank you, guys. Thanks for looking for me, and will invite me to this podcast.
Absolutely.
Thank you for tuning in to another episode of La Frontera. We hope you enjoyed the show. You can listen to more great conversations on our Spotify, as well as on your other favorite streaming platforms. You can find us online at lafronterapodcast.com, and make sure to subscribe to our newsletter for show notes and to stay in the loop for new content. Ciao for now.